Welcome back to the Sunday Report. I'm super happy you're here. It's actually been the year anniversary of me being on YouTube, making TikTok content, having the Discord, having people join. It's been a really fun journey. We've had a lot of growth and we have some announcements today, and we'll also talk about what's going on in the market. So let's go ahead and just hop right into it. So before we talk about the markets, a few announcements. The website is now live. So let's actually pull that up for everyone. If we go over here, you can check that out here. One of the things that I've incorporated now in Nobel Trading is text alerts. So since we're watching the market all day long, me and the team, if you want alerts on what were stocks, only stocks, no options for the text alerts, you can watch this video here to learn more as well. And you can sign up for those. Those are sent straight to your phone. It's a completely automated system. I operate the whole thing on my phone as well, and you'll get those notifications if you'd like to sign up for that because you don't like the Discord. This is the alternative that you can use. So go ahead and check that out. And so I hope you find that helpful. And so we're also working on an affiliate. There's a few other projects in the works in the background that I'm hoping to get out soon. Been very busy with a lot of this, and it's actually been a perfect time to do it as I am very bearish. I'm not liking playing this market to the upside. And I mean, let's just go ahead and break down how the week went. If we look right here on SPY, which I'll pull up right here, we can see that this market had some wild moves. There were some good downside plays that we got a little bit through the week. Overall, not really that great of a week, to be honest. Kind of a week. We did really well on Friday trading some of these downside moves when it had some resets, some long-term puts. You can see this is a nasty wedge development right here. But overall, I mean, the week, we were only up $1 over the week. Overall, this was pretty flat. I mean, Thursday was just crazy flat. That was just a premium killing day. And when you look, and I was kind of expecting this coming into Friday because we could see that the market participants are getting extremely bullish, buying tons of calls heading into Friday. I expected them to kill those premiums, and they absolutely did. So trading the index has been kind of meh. And for a better view of that, I'm actually going to go ahead and we'll go over here to our trading view, and we can see this wedge development. Kind of looking for an ABC. Sorry, I keep having some gas, keep burping. Gotta knock that off. If we look at this AB wave development, I'm looking for this for a break to the downside, although we got to be cautious here because a break to the upside will get a lot of volume here. This is kind of how I'm looking to play out. This is the Fibonacci level as well. And we can see that these have been pretty accurate in the past, besides that one that we got blown on last week. Because remember, I'm still favored on downside. This is like the third week in a row for me saying that this has got to come down. This market's getting irrational. But you got to also just keep in mind, this markets can be irrational longer than you can be solvent. I think I've become a little bit of a broken speaker on that topic as well, but that's just how it is. And so it's been kind of annoyed with myself even not playing this as much, but with all this chop, there's really not much to play. A lot of the money's been made in the small names. If you played Coinbase, you made big money there. We did play Coinbase, but sold out too early. Definitely did not catch that huge 30% day, which was just, I mean, beautiful if you were over there. Just interrupting myself real quick to say, hey, if you like those charts, if you like the way TradingView looks, you can use it as well. It's a fairly easy platform to learn. I'll be providing some educational content here soon as well to help traders utilize that. So if you want to use the #1 trading platform, click the link down below because we've just become an affiliate and you can get some special sign-up rewards. Energies continue to play out well though. Been playing in and out of UNG. Actually bought a little bit back into that, and that was nice. And one of the other things I'm doing right now, if we actually, I'll pull up to the double graph here, and we'll go ahead and pull up UVXY and VIX. Just look how low the volatility is getting in this market. And actually, I don't know why this went to a 1 day. Looking at VIX on a 1 day is not that useful whatsoever. Look, we're almost back in the teens on VIX. And we're already below $10 on UVXY. I've actually already started buying some UVXY and my stock portfolio. So not my options trading portfolio. When I'm seeing these start to get in the teens, if you look back at the performance over the year, if you're buying volatility, whether that's through a stock position or whether you're buying options in hopes that the premium will increase with the volatility increasing, if you have a more volatility based strategy, this is when you want to be buying that because this is getting so low, but I don't see the market environment improving. I expect this volatility to come back, and looking at these values just seems like a great trade to set up. Another trade that started to actually play out well is 2 was TLT. That's now a bit in a pullback. And I pulled some of this back, but I'm already thinking, looking at this, starting to come back to us. I think that going long on TLT in the second half of the year is going to be a beautiful trade. I really like being here as well, especially since it does look like inflation will now hit a choppy range. There's been some expectations that it won't be entrenched, some expectations that it will, and it will turn into hyperinflation. I'm not in that camp. I'm now thinking that we'll probably get some choppiness, but remember, it needs to come down, okay? The CPI needs to come down, and there's no historical precedent for that not coming down more without the Fed tightening more, except I think that they're close to breaking something, and it's impossible to pinpoint that exactly, but I'm expecting that right now, this is the time to go long, even though the premise should be as the Fed continues to hike interest rates, this should continue to come right back down. And we can see that it's chopping some, but I think we've already seen the lows in TLT at the 112 here. And I'm going to go ahead and buy back into this position likely this week because I did pull some out in a previous week. One of the other positions I pulled out on a little bit that everyone was pretty speculative on me about was I pulled out of XLE. Well, I didn't pull out. I simply pulled back my allocation because I was worried about this. You can see that this week was a big pullback. Lots of people were kind of speculative, like, what are you doing pulling out of this? We're super bullish here. Right, but I'm trying to trade this chop, and I got a few things wrong. Kind of had some lack on my fundamentals, lack of convictions there. On this pullback, I'm still liking it. If we actually pull up a chart here, we can see kind of what the value of crude oil is doing. And we could see that it's also had a pullback. Ooh, let me get myself out of the way here. We could see how this has started to pull back as well. We're looking at a 5-year graph right now. But I think this is a really pivotal price point right here. I think that this is the new paradigm. I think these prices will stay persistently high above this mark around the $80, what I'm actually looking at. So we could see a little bit of pullback, but the big thing here is that we have a supply issue. So I'm not so worried about the demand issue being persistent because I don't see the recession being a really deep recession. There's been some people saying that we're headed towards a depression. I see no signs of that. When they become prevalent, then I'll start reconsidering where my perspective is at. But right now, I'm focused on the supply issue that can't be resolved over the demand, the short-term demand stuff that's at play. And we've seen gas prices come back. We've seen the politicians trying to take a ton of credit. Oh, they did all this fixing and blah, 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 playing with optics. I don't care. When I'm looking at the supply issue, that's what I'm focused on. I like re-entering right here. I'm ready to go ahead, put my convictions back on, put the full trade back on, and get back in. There's also another trade that I'm really excited about, and this one might catch you off guard. Okay, be honest with me here. When's the last time you actually planned out your spending, your finances, or planned for your retirement, or how to preserve the wealth you already have? Listen, you need to call Rob Reed. There's no one better. Learn about different investment strategies to help you create or preserve your wealth. It's for your success. You know you need to get it done. I know you've been pushing it off. But honestly, learning about index-based life insurance, which is basically like a rich man's Roth IRA and allows me to be my own bank, was huge. So if you want to learn more, call the number above or visit cwrpcg.com. Wheat futures. Now the fundamentals here are really strong, almost just as strong as the energy fundamentals. We talked about this a lot. You have your third and fourth largest wheat producers completely destroyed. When the crop cycle hits, there's going to be a massive shortage, and this is going to spew lots of trouble in emerging markets. And look at where the price is trading at right now. This is ridiculous to me. We're near the lows. We're back before all the turmoil that happened with the Ukraine-Russia war breaking out, and we're back in the 700s. I expect this to come right back up. There's a few different ways that you can tackle this as well. Futures are probably going to be what's going to be the most interesting to me. Of course, I'm not going to go over the exact trade setup that's going to be in the Discord, but I'm also looking at WEAT and as maybe an opportunity here. As you can see, this is also pulled back. It's kind of crazy how far this is pulled back, to be honest, because and actually look at how ridiculous the volume is. It's picked up on it. So you can see the volume is still here. This is a wheat ETF. This is actually a trust ETF. Be interesting. There's a few other stocks that you could play that we'll probably talk about in the Discord, John Deere being one of them, that could be interesting. But I like this. I like this trade setup. I like the fundamentals. They're really solid, and this could be another really great trade heading in the second half of the year. Now, let's also take a moment to talk about uranium. So uranium has had a little bit of choppiness. A lot of this over the past week was because France closed down a lot of their nuclear reactors. This being because of the rising temperatures are turning into a huge issue. You see, the water is normally used to cool down the reactor. However, with the rising water temperatures and the reactor heating up the water that's supposed to flow away from the reactor, it's actually caused some environmental damage because the water is so hot. This water is not supposed to reach certain temperatures or else it destroys the surrounding environment, and it is. So the only thing they can do is shut those down. However, I'm still bullish in the sector because there's lots of innovations that could solve this problem. They're just not here in the short term, and it is just an issue for France. I think that this is a very localized issue in that one area, and the rest of the region has different processes that they use to cool the reactors that won't be as big of an issue as it is in France, as well as the innovations that I think could come around in the future to help resolve this. Look, the energy crisis is still an energy crisis, especially in Europe. There's even a petition that's starting to pick up a lot of attention where people are going to stop paying their energy bills as a way to protest against the European governments about how bad the energy crisis has become. However, I don't know where they're really going to get with that because it's not like the governments can do anything to resolve that. And it's not like they purposely tried to raise the prices on them. This is just how frustrated people are really becoming. The necessity for a real solution needs to come around. And I think that this will cause lots of new innovation in the nuclear energy sector. And that's why I'm still going to stay bullish on uranium. And the chop, to me, has just been continued buying opportunities. And of course, if you thought we were going to get this whole Sunday report and not talk about Taiwan, you're crazy, because of course I'm going to talk about that. So we got China upset that Nancy went to Taiwan, didn't want a U.S. diplomat here. You probably saw my short about it as well, where I said, okay, look, the U.S. basically had to stand behind Nancy Pelosi and send her over there, even though before the trip, no one wanted her to go at all. You know, we had the government say don't. We had President Biden say don't do that. The U.S. defense said don't do that. She went anyways. We had to back her. But now we're in a situation, we saw some headlines saying that China was even going to set up a blockade. Remember, a blockade is super serious. A blockade is an act of war. All right. So if that does develop, that is legally defined as an act of war. What I think they're probably likely going to do is an embargo, which is more of like an economic tactic, kind of like the economic tactics that we're using against Russia, not technical acts of war. But there's a huge difference between our relationship with Taiwan and our relationship with Ukraine. We want Ukraine to be a sovereign nation. We don't want them to be invaded by Russia who's trying to take over. We would like them to have their sovereignty. And for Europe, it's a little more essential because it's a big trading partner for them where they get a lot of their energy between Ukraine and Russia. But Taiwan's a much different story. We need Taiwan. We need Taiwan for a lot of our technology companies because we import so much of the tech we need for our semiconductors from there. And Taiwan needs us because we export so much of the food they need to them. This is an essential strategic partner that the U.S. has, and both political parties are very aware of this. But so is China, who's drawn a hard line saying that we should not mess with Taiwanese politics, that they will uphold their one China policy. But this nation is falling apart. They're incorporating a lot of the communist policies that led them down a bad path, led to economic turmoil, and they're falling apart with their real estate market. In fact, I think it's been a good opportunity to set up some longs and yang to short Chinese stocks because I think they're headed down a bad road. This does, however, not change the fact that they are still a military powerhouse right now. They've been building up their military for many years, and so everyone will definitely want to avoid war. My hope is that nothing comes of this. However, with the world being in such a dangerous spot, and with these new lines needing to be drawn, and with a lot of the old trading policies, we've had a trade war with China. It's already been tense with China for a minute. This is only making that even more elevated and more costly for everyone. This will also extend to the rest of the world. And it seems like there is a partnership also brewing between China and Russia with other countries as well. We can't forget that Russia is, Turkey was fine to trade with Russia. Italy's been fine to trade with Russia. Russia is now backed the ruble to gold. So there is a lot of developments geopolitically that make this just even more of a cautious, everyone's kind of walking on eggshells, doesn't want to upset anyone too much. Remember, we have atomic bombs. So this the whole development, you have to keep a cautious eye on it right now. The likelihood of a black swan has been still persistently high, and that needs to be in the back of your mind. It shouldn't dictate how you trade because the likelihood it actually happens is pretty low. No one actually wants a massive world war. However, it's still something you need to be aware of, and so we'll try to stay updated on the situation. But right now, besides what we've gone over, there's nothing really else to report there. And now it's time to head over to the economic calendar. On Monday, not much going on. The big things this week is going to be the core inflation, an inflation rate on Wednesday, and then PPI on Thursday. These are going to be big because we want to see these numbers actually coming down. If they do come down, it means that the Fed could pivot as fear of recession. But remember, also when it comes to that conversation, they changed the definition of recession. So that narrative isn't really one that I'm buying into a lot because I think they did that so they can continue to tighten hard on the market. So if this comes in still persistently hot, we could have a Volcker moment where the Fed's like, okay, we definitely need to tackle this. However, with gas coming down in some of the energy sectors, which I think is just a temporary pullback, we could see this number be a little bit better. However, there's still some different expectations. Some Fed offices think that this will actually still be persistently high. And, Goldman Sachs has even raised their inflation estimates for the later part of the year, which I do think is going to lead into this overall choppiness, which we've kind of discussed earlier. What will also be big is on Friday, we also have the Michigan's consumer sentiment. We want to keep an eye on that because remember, this becomes very cyclical in nature. If the consumer becomes fearful of a recession, they start to pull back, then we could see that become a self-fulfilling prophecy. And that's about it for the Sunday report. Last week showed you anything. It showed you that headlines are going to be huge for this market. Market's going to take any piece of good news it has, rally hard with it. The irrational market definitely wants to go long. Call buying still super strong. It's going to take a nice bludgeoning for this market to actually come down. So remember, you're watching those headlines. Best way to do that is to join the Discord so that you can stay in tune with what's going on, or maybe sign up for the text alerts because we'll be also sharing some important headlines there if they do come around. So I hope you enjoyed this week's report. There will be no earnings video today. There was kind of just mediocre feedback on that as well. Most people still just like this portion of the video. Of course, I'm going to still be posting about all the company reports that I like in the Discord. So make sure you hop over there if you want to keep up with what's going on. I hope you enjoyed this Sunday report. We did a lot of macro stuff, didn't talk about a lot of companies. So next week, I'm going to switch it up and we're going to talk about just companies. So make sure you're subscribed and you click that bell so you can keep up on the next video. I'll see you then.